Okay, we're live.
All right. Welcome to the session, gentlemen. Andrew Korn and Lee Saba. Thank you so much for being here. And I know some of you had the earlier sessions, and we really appreciate this one. So I'm just going to start, with my introduction, and then I'll kind of turn over to you, Andrew, and Lee. So I'm Kiran Garimella. I'm the Chief Scientist and CTO for Core Connects, and I've been in the financial services industry for many, many years, with the large companies as a global CIO for General Electric and other companies of such ilk. And also have experience as a personal trader myself in various types of markets in this space. And obviously, the entire private capital markets is a very, very exciting space to be in. So, every one of us in this entire ecosystem, our partners, all of us, right? We are on a mission to educate everyone about, how to be really successful in this type of environment. With that, I'm going to turn over, Andrew, if you will introduce yourself briefly, and then Lee.
Sure. Thank you. Andrew Korn, and anyone who was at the last session, I was there. The founder and chief strategist at E5A Integrated Marketing. We are a systematic data-driven investor acquisition firm. We work all across investor acquisition, meaning we work in real estate, we work for exchange-traded funds, hedge funds, venture funds, private equity, and of course, doing private raises in Reg D and RegA+.
Oh, thanks, Andy. Lee Saba, I'm the head of market structure for Rialto Markets. We're a broker-dealer in the United States. We help companies form capital within the Reg A, CF, and D constructs. We're registered in all 50 states. We also run a secondary trading platform, which is an alternative trading system, or you'll hear this called an ATS, which allows us to match buyers and sellers of these private securities. A quick background on me. I've been in the financial services markets for over 20 years. The last 18 years prior to Rialto, I spent at Wellington Management, which is an asset management firm located in the Boston area. And I also co-chair the fixed trading community, which is an industry standards organization that focuses on the trade communication standards that allow us to do such trading.
Awesome. Thanks, Lee, and thanks, Andrew. So I just want to give an opener question and kind of get a sense from both of you. In this whole, RegA space, and to be really successful in this one, and specifically from a Medtech ecosystem perspective, there's this whole notion of there's a initial capital raise, investment happening, and then of course what happens after that, right? We made an investment. I'm an investor in RegA. I did this stuff, and then what happens, right? So, Lee, I'm going to point to you first and see, to what extent this. Is there a perception of the secondary markets in these types of environments, right? Capital markets. And what is the sense of maturity and eagerness for people to participate in something like this?
Sure. Yeah. No, thanks, Kiran. It's a great question. I think, the Jobs Act was huge, right? In this space, it allowed for the first time, retail and accredited and institutional investors to actually participate in these early stage growth companies. And, it still astonishes me, and hopefully people haven't heard me talk about this before, but, prior to 2012, it would be illegal to own, early stage companies, like a Tesla or, Amazon or something to that effect, something that's a household name now before they went public. It was illegal. So it hasn't been that long. So now with the Jobs Act, it allows participants to actually get invested in those companies And, there's a lot more opportunities. There's, I hear a lot of different numbers, and I don't know if you guys can back these up too, but somewhere between 28 and 32 million private companies in the United States alone. And I'm not sure, let's just call it 30 million to be simple. Now, investors would have access to a number of them in the primary market. Big deal. It's a huge deal. You can invest, you can put those things into your IRAs now, in your retirement savings, or you can, just put them in your general portfolio. That's all well and good. One of the problems, with that though, was that there was no way to get in or out of those securities. So, if you wanted to realize some gains, if you wanted to, if you had to sell for a particular reason, or you wanted to buy more or get into it at all because you missed it in the primary, there was no mechanism to allow for that. So hence comes the secondary market infrastructure. So, at Rialto, we have what they call an alternative trading system, again, which allows that secondary trading where you can put an order on whether to buy or sell. And, hopefully, you find the other side. Within reasonable, price constraints. So that's, we got a 1-2 punch, I think, as far as magic goes. One, you can invest in these, awesome early stage or potentially awesome. Not all of them will be awesome, but a lot of them, hopefully will be. And then you can trade in and out of those securities, later on. And each one of the constructs in the private realm, whether it's A or CF or D, have different regulations around them about how soon you can trade them, but you can trade them going forward.
Yeah, awesome. Andrew, so if I turn this to the other side for a second, and from an investor perspective, so, you're very much tuned into, how investors think and the behavior, and I know you do a lot of wonderful analytics on them. How do you see investors perceiving this whole value proposition of secondary trading? Is that something that they consider to be hugely attractive when there's an issuer and there is the facility for secondary trading? How does that play into this equation?
Yeah, so it's something that always comes up once they're really thinking about it. Remember, we've got millions of people investing for the first, second, or third time in a private company. It's not something they've been doing forever, although some people have been doing it most of their careers. But a lot of people are new to this. So we have some fixed income RegA pluses we're working on where basically you invest, it's like buying a bond and you're getting yield. Even in those, people will want to know is the redemption policy. And in almost every offering circular, it is the right of the issuer to, especially in an emergency situation, to take care of a redemption. But what if it's something paying 10% and you need to get out, but someone else wants to get in? So bam, an ATS is a way of you're putting it out there and the issuer doesn't have to redeem. What if it's a long-term hold? We've had some VC type holding companies that we've worked for. And generally, you think of a VC fund, it's a 5 or 10 year hold. So one of the things investors want to know is, are there 1,000 people waiting to make that trade? They don't need to know that. What they want to know is that they don't have to go to some specialized brokerage that's then going to have a team make phone calls and charge them, more than their stock is worth to facilitate that trade. So we do work with, of course, your firm and also with Lee's firm. And what's so great about that is that on almost every deal that we're working on, there is the ability for them to put it on a secondary marketplace. It is a supply and demand market at that point. But even if you find your own buyer privately, it is so great to have a marketplace in which to facilitate that. Awesome.
What do you feel, and I'm going to turn to Andy and then hopefully, Lee, you can chime in as well. How, if you're looking at issuers and kind of helping them succeed throughout this process, how much of an emphasis would you put on their ability to understand the secondary market, secondary trading as a value proposition for their company, for their offering?
So I would answer that that most issuers don't want to see their shares trading all over the place the way you would a public company. But I think it's very comforting for them to know that if there are people who didn't get in, or you hit certain milestones, it's a way of them figuring out valuation. So if they sold at $10 a share, they've hit another milestone, and someone wants to buy at $30 a share. That gives them an idea if they want to do another offering. So there's a lot of ancillary information that comes their way by putting their shares on the ATS or making sure that investors can buy, sell, hold. And as I said, our job in the marketing world is creating a lot of fear of missing out. And anyway, so when people didn't get in, if they can buy shares from anyone who has buyer's remorse in those first 30 days, that's a really nice thing also. Compliance willing on everything.
Yeah, of course.
Yeah, no, I'd like to add a little bit to that too. This comes up a lot, and I think the attitudes are evolving quite rapidly. We've spoken to several firms who say, we're staying private. We don't have plans to go public anytime soon or ever. We've been private now for 8 or 10 years. We thought we might go public in our first 2 or 3 years, and we granted employee stock. Now those employees have been with us for some extended period of time, and they've had life-changing events. They want to buy a house, they have children, college, whatever. Now they want to realize something, right? So they have paper value and equity in the company, but there's no way to really realize that. Through an ATS mechanism, that is possible. So those have been very interesting conversations. It's almost like an employee benefit, for their folks that have stuck through and been there. Especially if the company's doing quite well, there are folks that actually want to, from the outside, that want to get some taste of that. I think the other opportunity here is around you can have a real-time order book, so you can see a real-time price at any given moment. But it's also a factor of the amount of investors that you actually have already on the cap table. Again, working with core connects and making sure that all of that ticks and ties. But if you have and I'm going to say the F word, Kiran, which is short for fluidity. We can't guarantee, any sort of liquidity, but we can guarantee some fluidity that, we can streamline the process back to what Andrew was saying, where, you don't have to pick up the phone, call some specialized broker. They make 50 calls. They charge you an arm and a leg. You can put your order into the ecosystem, the ATS. We can easily transact. And after the hours and hours and hours Kiran and I have spent on the phone and, nights, making sure this processes work, to, validate that the orders are good and succinct and get updated on the cap table and everything's lined up. So there's a lot of different opportunities here. The other piece too, where we've seen it does have some traction is around an auction or a point in time cross. So if you have 500 investors or you have 100,000 investors, obviously your liquidity profile is probably going to be a little bit different. So what we're capable of doing here is creating a time. Let's call it June 7th. At noontime Eastern. Please put in your orders, and we're going to cross between noon and 12:15. So we can aggregate orders all the way up until that moment, and get all the flow at one time, as opposed to a real-time limit order book where orders are resting there and you're waiting for a fish to kind of swim by, hopefully with their hook in the water. We can get all the fish in the same pond at the same time, and then they'll do what they do.
No, absolutely. So will there be a huge behavioral change and expectations because when people get to the secondary markets or ask about secondary markets, because most people have come from and have experience with the public markets. I mean, the way they behave, their expectation for liquidity, for order fulfillment, and so on, or program trading and so on. I mean, people have a perception of that. Is it going to drastically change? Are we seeing the groundswell of a whole segment of the population which are becoming even bigger than the private, the public markets, where they have a different level of connection and different style of secondary market activity?
Yeah, so let's start with the New York Stock Exchange is the largest secondary market out there, and then the NASDAQ. So although the OTC may beg to differ and say they're actually larger than both. But there are shares on the New York Stock Exchange which will have zero volume today. That's because there are not active buyers and they're not active sellers. So it is a supply-demand market. It will always be. There are a lot of logistics and technology that go into making for smooth markets. There are market makers. There's the floor brokers, the specialists, as they're called. A lot of that has disappeared with the whole electronic trading. And firms like Rialto have done an incredible job with getting this technology together and marrying it with a TA like Core. But it is a supply and demand market. And if there are no buyers and there are sellers, the price could drop, or there could just be crickets. There could be no one's just interested. So, for people to sell shares, there have to be buyers. For people to buy shares, on the other side of that, there have to be sellers. So if you have a hot issue and it's doing really well, people want to get in. This is, we live in a capitalist society. If it came out at $10, maybe it needs to sell at 100 because someone's just dying to get in. In which case that will motivate sellers. I mean, how much do we know? Why do we know how much Apple Computer is worth right now? You can go to the NASDAQ and get a price because that's what people are willing to pay. It's just a very large market for that particular issuer.
That's right. I know we're running a little bit out of time, and we have one-on-one conversations with us here, and we can go on for hours on this stuff. It's pretty exciting, actually. What I would like to do is maybe if you can summarize. Again, I apologize for the interest of time, but if you can summarize, the key takeaways that you feel that issuers and investors need to know, and to be prepared, especially the issuers need to be prepared for a RegA, and what would be good for them to know as one or two or three really key takeaways in terms of the value of the secondary market facility. Lee, you want to go first?
Sure. Yeah, I think understand the constructs where you're raising your capital. Is it a Reg D? Is it a Reg A? Is it a Reg CF? And ask yourself the question. Do I want to perform secondary trading or allow secondary trading once the seasoning periods are met for each one? And just as a quick sidebar. Reg CF, once the raise is done, it's a year maturation process, 12 months. Reg A is as soon as the raise is complete, and and again, I'm using kind of general-ish terms, but and then Reg D is for accredited investors only, and there is a 12-month hold period on that for most instances. There's always some odd exceptions, but just understand which one facilitates what you're trying to accomplish as an entity, and just understand the Jobs Act a little bit and what's underneath it. And we're here to serve. We do have the ecosystem available across Core Connex and Rialto to facilitate both primary and secondary fluidly.
Awesome. You had to get in the F word. That's great. Thank you. Excellent.
I had not heard the F word before, but I like it. So, to issuers, I say don't ignore the ATS and say it's something we'll do after we close. You need that facility before you close. And if you do the math quickly, if you're raising $20 million, your average investor's putting in 2,200, bam, you have a boatload of shareholders. If you don't want phone calls saying, something's happened and I really want to sell my shares, let them put it on the ATS. And then also, as you're doing investor communications, that ATS might start to light up. So, it is something, it definitely helps in marketing to have that in place. And it's also a very practical tool.
Awesome. Andrew Korn, CEO of E5A Integrated Marketing, and Lee Saba, Head of Market Structure, Rialto Markets. Gentlemen, it's always been a pleasure talking to you guys. You guys have so much insights that you bring from your wide experience, both in investor analytics and in capital markets. Really appreciate it. Thank you so much for being here with us.
Thank you, Kiran. Good to see you, Andrew.
Good to see you.
Bye-bye.